Welcome back to the Property Punch podcast. I'm Tabo, and as always, I'm joined by my co-host, property mentor, and dad, Washington Mizambani.
Great to be back. And episode 15 already. Our time is flying, and we can't wait to give you more episodes to come.
Last episode, we talked about how most Australians don't fail, but just quit too early. But today, we're going to talk more about what actually happens before they quit. Yes, what happens before they quit. Underline the quit.
So when it comes to quitting, we see a lot of confusion. And more importantly, how good mentoring moves people away from quitting and confusion into investing with confidence. In other words, confidence wipes away confusion. Can I talk about your uniform? You're looking very sharp.
I always look sharp.
You're looking very sharp.
You're a bit vain.
Yeah, and similar attire, similar style?
It's because it's a uniform.
Yes, it is. How do you like it? Suits you, fits you well.
I like it, yeah.
Yeah, it's good. Nice. It's good. Rebrand, new uniform. Do you like wearing a uniform?
It makes it easier to figure out what to wear.
That's right. That's very true.
Dad, one thing I've noticed is people don't lack information anymore. The reality is, for most people, they drown in it. So in this segment, we're going to cover information does not equal confidence.
You're right when you say that, because nowadays, information is everywhere. The podcasts, the YouTube, social media, everyone has got an opinion. But despite all the information, people still don't move. That's simply because confidence doesn't come from knowing it all. It comes from knowing what really, really matters. I can give you a few examples on that. I remember one client of ours, they were thinking of buying a property with their self-managed super fund. Very, very capable couple. They've been researching for years and they had bulk of information. They hadn't moved at all, not because they lacked information about property, but they were terrified about breaking the rules of self-managed super funds.
So in other words, what you're saying is more learning actually made their situation worse.
That's exactly right. Every little piece of information that they had added fear onto their situation. They added fear to them. So mentoring didn't reduce the rules about SMSFs. It simply reduced the fear and the noise. So once they understood what really mattered, that's when we saw them moving forward. And that's what happened.
That's very interesting. And what you're saying is that, like the name of this segment, more information isn't always better. It can often lead to people being confused or lost. And instead, mentoring can help with clarity and making sure that people feel confident in the moves they make.
Yeah, you nailed it. That's exactly right.
And that leads us to our second segment, which is what does confusion actually look like? When people say they're confused, what are they actually saying?
You know what, Tabo? Usually they're talking about these few things. They don't trust their judgment. They are also scared about getting it wrong. Or simply, what about if this decision sets them back? So confusion isn't about a lack of intelligence. It is simply a lack of perspective. And more often than not, confusion leads to inaction, which is something quite dangerous in property investing and property as a whole.
Because doing nothing is still making a decision.
Absolutely, because more often than not, we have seen investors waiting for years for the perfect time. And that delay quietly cost them more than a bad purchase ever would.
So when someone is confused, they have two options. They could either stay confused and be lost without guidance or clarity and do nothing, which is still a decision, or they can do something about it.
Something about it. Yes.
So what actually changes when someone gets mentoring?
Three things change. So first, their decisions become clearer. Secondly, emotions will stop driving strategy. And thirdly, progress replaces perfection. So we see a lot of clients, normally same income over years, same level of debt, and they probably haven't moved. But as soon as they change behavior and everything becomes clearer, then boom, the change will come, and that's when they see things from a different perspective. Yeah.
And how does that happen?
Before mentoring, their questions are emotional. Questions like, what if interest rates go up? What if the tenant leaves? Or simply, what if the rules change? And after mentoring, their questions now become strategic. For example, does this property meet my long-term objective? Can I still service this loan under stress, for example, if interest rates go up? Or will these investments be adequate for my retirement? Some people, but simply a different mindset altogether.
So we've talked through what a confused individual does and what they look like in regards to property, and that when they choose that they want to see change and they want to do something about their situation, there's a behavioral shift. But let's now move on to real investor patterns. What do real investors do?
You're right. Before mentoring, these are some of the patterns that we see or that we witness. There's a lot of constant second guessing. They are all chasing headlines in the news or newspapers or even on social media. And the one that really kills a lot of people is analysis paralysis. And after mentoring, things shift. There's now intentional action, acceptance that no deal is perfect, as well as calm reviews instead of panic. Confidence in property isn't loud. It is steady and it's quiet.
And I feel like the key is that confident investors don't rush, but they also don't freeze.
That's right.
Those investors proactively use their confidence to go do something. There's a fine line between confidence and arrogance.
Very fine. Arrogance ignores risk and confidence respects it. So here's what confident investors do. They run their numbers, they ask better questions, and they stay humble. Arrogant investors, we often see them chasing hype or trying to do things in a shortcut way.
So by respecting risks, investors become confident. But how come confident investors are able to move faster? And why do they seem to act faster when opportunities arise?
The simple answer there is simply because they've already done all the thinking beforehand. They know their strategy, their budget, and most importantly, their risk tolerance. I remember we had a client who had waited for years, probably about 5 years, trying to save every year, putting up a lot of money, saying that I want to wait for the right opportunity, for the right time. What they didn't realize is that whilst they were waiting, the market was actually shifting upwards as well. Prices were increasing. So when we sat down with them, we gave them confidence with a clear strategy. Their feedback was, I didn't know that waiting is actually a risk in its own. And for them, that was a big realization.
So it seems like the key in all of this is that waiting and doing nothing is not going to yield any results. And confident investors do the exact opposite. They are always doing something. But how can someone who's maybe confused or is new to the space or has been researching but is scared to take those big leaps and big steps build confidence?
So this is how they build confidence. They build it through education, through repetition, reflection, and support. So it's not rushing, and it's also not about copying others, what they're doing.
So you're saying that moving slowly is fine, just as long as you're moving forward.
That's absolutely right, correct. As long as you know and you understand what your journey ahead looks like.
So you've kind of painted the roadmap for people on how to go from confused to hopefully building that confidence to do something.
That's what we do. That's why we say we are good mentors. I'm just joking. I know we are mentors, but it's not up to us to blow our own horn. Is it blow your horn or blow your trumpet? How do they say?
I think it's blow your own horn.
Blow our own horns. It's up to feedback that we get from our clients. So, here is a reflection this week. Are you confused that you don't know enough? Or because you don't trust your decisions yet?
Confidence isn't something you're born with. It's something you build with experience and guidance.
And remember, confident investors aren't fearless. They are simply supported through good mentorship.
That's episode 15 of the Property Punch podcast.
Please subscribe, share this with someone who feels stuck, and we'll see you in the next episode.
Sip smart, invest better.